let's get into this, team. The insurance policy plus. It may not sound super exciting or super sexy, but we need to talk about it. It's actually bloody important. And the reason I'm going to talk about it is, hey, I love you guys, and I actually want you to succeed, and I want what's actually best for you. So this session is kind of like insurance. Nobody likes paying for it, but you thank yourself later when you need it. So plus it's going to save you a lot of pain if the proverbial hits the fan, and it could well set you up for success in the future as well. To kick off with, I have a question here, and I'd love you to put your answers in the chat. How do you think the construction industry, I mean, we're pretty much all of us in the construction-based service industry. We can tell from what's happening in the economy, from what's happened in the past. And I want to talk about that a little bit right now, because I think we could learn some lessons from that. If we don't get this right, there's some things that can happen. I just want to quickly talk through them. First thing is, typically we think the golden summer will never end. We think the good times will last forever. And look, the last 10 years have been an incredible economic run. Unbelievable. But the golden summer, it does come to an end at some stage, and there could potentially be a rude awakening. You might get surprised if you're not ready for it when things get tougher, or maybe there is a bit of a recession as well. And in those situations, obviously, some people are unprepared. And I love this saying, you can tell who's naked when the tide goes out. You can tell who's naked when the tide goes out. So you can lose your shirt and your business if you're not prepared for downtimes, if you're not on top of it. And it's often due to the effect other people's business has on you. It's other people's business failures that can really affect you, and not getting paid, and that whole knock-on effect as well. That can be part of it. Okay. Now, obviously you can, if you get this right, it's awesome. You can stop the predictable things that'll take you out. I mean, hey, in business and in life, really bad shit can happen occasionally. There's a few things you can't control, but most things you can control. And so you're not going to get hurt by the things that could hurt you. You're going to avoid all the heartache. You're not going to have the cash flow problems, or the liquidations, or the laying off of team members, or the lying awake at night thinking about how you're going to make payments and make ends meet, because you'll be protected. And you're going to be positioned for opportunity. And that's why I call this the insurance policy plus, because if you get this right, not only are you going to, not get into trouble, but you're going to set yourself up for success in the future. Often the money's made when the going's tough. Most people will slash costs and get rid of employees, but if you're proactive, you won't have to do that. And when the good times come back, you'll be in a position to actually pick them up really quickly, because most people don't have the capacity to pick up when things kick off again as well. You might even be able to buy out some of your competitors in the interim as well, and get their client bases as well. So definitely some stuff happening. We should be aware of it, and it's important that we are. So 5 really quick key principles to be aware of here as well. And you might want to just jot down a couple of notes on these. I'll talk through these pretty quick. And then I want to show you the 3 key things you need to do to get this right. There's really just 3 things you need to get to be protected and have the right insurance in place. I think the first thing you've got to be really aware of in business and in this type of environment is the power of lag. So little story, I got a mate, his name's Shane. He's my groomsman, probably my best mate. Really clicked at university, great guy. He lives in the States. He lives just out of New York. And he works for a company called Danone, who, I don't know, does anyone know what Danone is? Put your hand up if you do. Massive global dairy foods and food producing company. If you're a Kiwi, yogurt, yeah. If you're a Kiwi, Fonterra is like a competitor. And he's a very, very successful guy, Shane. He's the CEO of their North American operation. Super good dude, super smart. I was chatting with him a couple of weeks ago, and he's like, we've got a massive problem in our business at the moment, is we can't get yogurt lids. Our multi-billion-dollar business has been held up because we can't find the yogurt lids that we need. And that's partly due to supply issues through COVID and all that sort of thing. But he's like, there's actually nothing we can do about it right now. We can't just change it right now because we needed to have this shit sorted out 3 or 4 months ago. That's lag, right? The decisions we make now are going to affect us in the next 6 to 12 to 18 months, or the success that we're having now is due to the things we did over the previous 18, 12 to 6 months. Well, makes sense. Give me a thumbs up if that makes sense, because it's really important, this. So here's the thing. If things start to go south, often it's too late to do stuff when that happens. We've got to do something now to protect ourselves so we're set up properly now. Okay? So that's important, super important. You know, for example, you need your terms of trade set up now, not when someone lets you down from payments. Point is, sometimes stuff takes time to fruit. And, you know, if things start to go sideways, well, sometimes it's a bit late to fix them up then. We need to be really vigilant and pay attention to what's happening in the economy to get it sorted now. That's the whole point of this, which is awesome. Okay, so point 2 is, hey, playing defense is really important. Defense is huge in business. So Warren Buffett said, never lose money. That's the key to successful investing. So if you think about championship-winning sports teams, whether it's basketball, baseball, football, rugby league, you know, whatever it is, championships are won on defense. So defense in this situation really is about what can we do to stop losing money? What can we do to protect the downside risk? And I'm going to talk about 3 things we can do to do that. So playing defense is really flipping important. Third thing is, hey, economies are 2-speed. So even if we're in the situation, you know, if we're in the situation where things do start to go south, oh, that's not what I want. If things do start to go south, so maybe we are in, you know, in this situation here, over here, we are here. There's still a lot of opportunity there. It doesn't mean it's all doom and gloom. There's still lots of stuff that we can do that will work. And for instance, if you think about the pandemic, 2-speed economy, right? Construction, and most of our businesses have been pretty busy when we could work. But if you think about travel agents, tourism, absolute bust, nightmare. You think about spa pools, swimming pools, landscaping, stuff that can be done as kind of a luxury, not a, you know, like a discretionary purchase, doesn't involve travel. That's crushed it. So there's always pockets of the economy are doing well, and we want to find those. So we want to find the parts that are good. Fourth thing is want to spread the risk. So this is huge. If you think about investing, if you put all your money in the share market, that's not a balanced portfolio, because if that goes bust, you've lost everything. If you buy one building, you know, that can be really risky because maybe no tenants, for example. So diversification is important, and 1 is a terrible number in business. 1 client, 1 market, 1 team member, 1 person in the business who knows everything, if that's you, is really tricky because you've got a single point of failure. So a single point of failure is incredibly risky, and we want to try and take that out of our business if at all possible. Okay, last thing. I want to think long term. So it's really easy to get stuck in the day-to-day. And this is what this Eat the Veggie session is all about. You know, especially when the cost of doing something is in the future. You know, if we don't do something now, we're not going to realize that pain until the future, but it might catch up with you. So if you don't pay your insurance premiums, you might save a few $1,000s now, but you could get, you know, burnt in the future. And the lag effect here is really important. So point is, let's focus on the things we need to do now to make sure we crush it later as well. That's massively important. So we've got to think not just about today. And I know this is really tricky when we're knees deep in jobs, we're trying to juggle schedules when our team members are away, but we know that we're at least B or C on that curve, and D comes after that. And for those of you who've been through this cycle, and I've been through this cycle and nearly taken out by a cycle like this, it's super important to plan in advance. Those of you who haven't, take it from us who have, and don't learn the lesson the hard way. And there's just a little diagram here I just want to walk through that I think is going to really help. So for me, there are just three things we want to get right. 3 things to get right, and they are really simple. You know, we've got to protect cash flow, we've got to maintain our margins, and we have to diversify our client base. Those are the 3 things we need to do. So let's just look at how they play out. So the first thing is, and just write these down as we go, team, as well. Protect cash flow. So cash flow is obviously the lifeblood of your business, and without cash, things get tricky. And cash is obviously gets affected in a contraction because the money stops flowing around the economy, and typically it's our building contractors or a large client can't pay, or a bunch of small ones, and then we're squeezed in the middle. So that's the first thing. The second thing is, we need to maintain our margins. Number two, and this is actually sounds simple, but it's really tricky at the moment. And I'll go into more detail in a sec, but actually there's a lot of inflationary pressure. Labor is expensive, materials are expensive, materials are not even available, which causes blowouts in scheduling, extra trips to site, storing stuff, mucking around, all adds to the labor cost of doing your job. So your margins are under a lot of pressure. So that's the second thing. And the third thing is diversify client base. So that means, if you think of a stool, if it's got one leg, it's not very stable. If it's got two legs, it's not very stable. 3 is better, but 25, like a bunch of stools, legs to a stool, gives it a lot of stability. And that's important, because if you've got one client who makes up a large percentage of your work and that's a failure point, that can take your whole business out. So we want to diversify the client base. So in each of these areas, there's 3 things that we want to do. First thing is your terms of trade. Now, I know most of you have done this, but if you haven't, you need to. If it's not on your plan yet, it might be something we need to put in the plan. And you need the ability to, and I'm not going to go into all of the terms of trade today because that's a whole nother kettle of fish, but we need them to have teeth, and we need them to have the ability to, put a lien over, or make us a preferential creditor where possible with our clients, so that we're not the last one to get paid. And there's some ways that you can do that depending on where you're based, but basically you become more of a secured creditor than just everybody else. But you need that in your terms of trade. So terms of trade are really important. This one is important too. You need to vet your clients. So as soon as the squeeze comes on, what happens? Well, John the builder has not paid Joe the plumber. What does he do? Well, he goes and finds Jane the plumber, who can also extend him some credit, and then Jill the plumber as well. And so they tend to start shopping around for suppliers or service providers because they haven't paid this one. And so you find that you can start to become the bank for people. So if you find different clients popping up, you want to just make sure that they are actually solvent and liquid. And there's a couple of things you can do here. Terms of trade is one, credit checks, and obviously deposits wherever possible, even if it's just for materials. If you buy the materials and get paid for the materials, because deposits are the biggest bullshit detector ever, right? They can't pay a deposit, won't, or that's difficult. And I know with some commercial jobs, this can be difficult, but it's an interesting environment. You'll be surprised what you can negotiate right now. And I know several board members are doing this with building contractors. And the last one is forecasting. So having a cash flow forecast for the next 8 to 12 weeks, just to see how it's playing out. And there's a template to do this in the membership site, and there's some trainings on this. Don't stress out about it too much, but this is certainly something that's really helpful so you can see where things are at. Okay, so first thing, protect cash flow. Second thing, maintain your margins. Got to keep the spread. Got to make that spread, keep it strong so that there's money being generated from doing our jobs. First thing to do here is back costing. Now, I know this is obvious, but it's important here all the time, but it's also important here because you'll start to see really quickly how your profitability has been eaten out by inflation. And by not just increases in prices, but you get all the problems with logistics, and they can be a killer. If you can't complete the project or the job in the number of trips that you thought you could, that adds a massive amount of cost. So that's important, back costing. Monthly financials. So that's your profit and loss or income statement, profit and loss or income statement, depending on where you're based, and balance sheet as well, and your balance sheet, which we'll get when we put the financials dashboard together. That's just going to tell you how the business is tracking and give you some feedback to make sure you're on track. So if you don't do that, you can go 2 or 3 months down the track and shit hit the fan. Not good. Next one is you got a proof for inflation. Or inflation. And I just want to just demonstrate how tricky this is. And you probably understand this, maybe you do, maybe you don't, but I just want to run through some numbers. I know numbers can be a bit boring, but again, it's like eating your veggies, so let's get into it. Let's say you have a job and the revenue is 10K, and the cost of goods is 6K. Right, what's the gross profit? 4K, perfect. And what's the gross profit margin? 40%, perfect. Okay. 40% GP, perfect. Okay. So let's run another scenario. Costs up 25%. Okay, and that's materials, delays, maybe labor, etc. So they're up 25%. So your rev's still 10. What's 25% of 6K is 1,500, right? So your costs now are 7.5. Your profit, what's your GP now? What's your GP and your GP margin? Just hit it in the chat for me.
Yeah, 25%.
Yep, perfect. So,
25K.
Yep. So it's 25%. Perfect. Okay. So GP is 25%. So here's the interesting thing. If you look at the changes here, your costs are up by 25%. Your profit is down. So if you just do the numbers, so it was 4,000, it's down to 2,500, so it's down 1,500. So 1,500 divided by the original amount is 4,000. That's going to give you 37.5%. Okay. So costs up 25%, profits down 37.5%. Okay. So just let that marinate for a minute. Costs go up 25, profits go down 37.5% gross profit. It's a huge hit, right? So this is massively important to stay across those margins because it will literally take the shirt off your back. All right. Lastly, we want to diversify our client base. This is huge because if you have one client, you can be sunk. It's not just one client though. There's a couple of things at play here. So what have I've written here within your niche or your niche. So let's say you do a lot of work with group housing, so volume builders. And let's say you have 1 or 2 good clients in that area. Well, maybe you need 3 or 4. Maybe you need to get more within your market to actually, because one of those might not be particularly well run. We need more legs on the stool there. So let's look within our market to see if we can spread the love a little bit more. So that's the first thing. The second thing is you might actually want to add a niche or add a niche because the problem may not be a firm level problem or a business level problem. It might be a sector problem. It might be that, let's say, lower volume building houses, that really takes a hit in general. The whole sector takes a hit. I'm not saying it will, but it might. And therefore, you'd want something else in your business to support to provide the clients. And so you might look at another area. Maybe you're looking to get more involved with some renovation builders. That might be a good switch. Or maybe you're looking to do some more service and maintenance work, for example. Maybe you're a landscaper and you decide, actually, I'm going to get into garden maintenance as well. That might be a switch. So you've got some more stools to your markets. So that's the other thing. And the last thing I think is really important, which goes across the marketing, is you need some proactive marketing. So it's probably a bit late to start marketing when you don't have any work. You want to start getting those systems in place now so that you can gear up and you can keep the workflow coming in. Okay, so we know there's some funky stuff happening. We know we're heading to, maybe we're at B, maybe we're at C, maybe we're D, but we know that what's going to happen. We know interest rates are already going up. We know that there's some pressure coming on. Still super busy right now, granted. Make sure we're on the front foot and we're well protected. Really 3 things we need to do: protect our cash flow, maintain our margins, and diversify our client base. Like I said, this was like eating your veggies. I've tried to make it as sexy and interesting as possible. I don't know how I've done. Hopefully it's okay. But it is super important. And we needed to talk about this because I know that this stuff is coming if it's not here already. And I love you guys to bits. So it's important to me that you're forearmed and forewarned. You don't have to do all of this at once. It's about starting to think about this stuff and maybe getting 1 or 2 of these things into that 6-week plan, so we can actually, build the strength in our business, make it reliable, make it robust, and make it strong. Not just so we survive, but actually, when everyone else is burning, we're still going to be churning ahead and actually making a lot of grounds, because a lot of the winning is done when the going's tough.